Hello friends, a very warm welcome to my channel. In this video, we are going to analyze another interesting company, which is one of my favorites from the IT sector. That's KPIT Technologies. As you know, we have been tracking this company for a very long time, and it has performed exceedingly well, beating almost all the companies of its sector. In terms of result performance, the result continue to be better than earlier, and that's why the stock price is also going up, appreciating the performance of the company in terms of results. So in this video, we'll do a quick analysis and understand what are the recent developments in the company and whether at the current levels is it still sensible to enter this stock. We have already made a detailed video of this company in the past, and you can refer to that video for a detailed analysis of this company. If you're new to the channel, please do subscribe and hit the bell icon, and if you're not a part of a Telegram channel, do join today by searching my name on Telegram, as every day morning I post the market analysis which will help you manage your portfolio better. So let's start the crisp analysis of KPIT Technologies. This will be the flow of our presentation. We'll discuss the business model in brief. We'll look at the chart stock performance in the last few years. We'll look at the main financial parameters. We'll understand why the stock has been rising in the last few quarters or last few years. We'll understand what is the outlook of the management going forward. We'll understand the risks in the business. We'll look at the valuations of the stock at the present level. And by doing all this, we'll form a view on the stock. So KPIT Technologies is a technology company at a global scale. All the major OEMs globally in the auto sector are their clients. So it is not a typical software development company. They work in a very niche sector, which is in the mobility sector or the auto sector, and they developed advanced technologies for this sector. So all the big brands, you name it, they work with this company to develop technologies to make their cars more efficient, advanced, and of latest technology. Going forward, as the usage of electric cars increases, the amount of software or technology in a car is expected to multiply compared to a traditional IC engine. So you will observe certain tailwinds as the number of usage in the cars increases, as well as per car the amount of technology or software used is going to increase. That is creating tailwinds for this particular company and this industry to grow. So the company works on autonomous, clean, smart and connected future mobility. So that means whenever somebody wants to do some automation in a car, their technology is useful for cleaner, greener mobility, like the electric vehicles, hydrogen cells, all those things also their technology is useful. And going forward, using the internet, satellite connections, all the devices like the IoT will be interconnected. So they work on such technologies also. So it's a global company having development centers in India as well as abroad in countries like USA, China, Japan, Thailand. And as they work on new technologies, they keep registering patents to their portfolio. When you look at the stock performance, it has been a great performer, giving multi-bagger returns in the last 3-4 years post-COVID, and we have identified the stock at somewhere around 100 levels. In terms of revenue, the revenue reflects the growth in the stock. It was doing somewhere around 2000 crores in FY20, and in the last 3 to 4 years, the revenue has almost doubled to more than 4000 crores. Along with this, what has happened? The bottom line has grown faster. EBITDA has improved from about 290 crores to 800 crores. So this has become 4x. Why has this happened? Because along with the revenue growth, margin expansion has also happened. EBITDA margin has grown from 13% to almost 20% now in the latest quarter. So what do you observe here? In the recent short which I have created, I have shared my recipe for multi-bagger returns. In that I have mentioned that there are 3 elements for growth. This is a classic example for that. So those 3 elements for multi-bagger returns were sales growth, profit expansion or margin expansion, and relating of the valuation multiple. All the 3 have happened in this particular example. The sales have grown faster at 15-20%, in fact more than in the last 3-4 years. Margin expansion has happened and margin has nearly doubled, as well as the valuation multiple which the stock was getting earlier close to about 20 times, that has multiplied to almost 80 times. So combining all these 3, the stock has given multi-bagger returns. Reasons for the rise, as we have discussed, there has been a consistent growth in sales of more than 13 quarters in a sequence. The same way profits have grown in a sequence quarter on quarter, almost 13 quarters. So such consistent performance has led to this growth. Overall in the industry, there are tailwinds which are supporting this growth. Now what is the growth outlook which the management is giving in this year and going forward? In FY24, they have increased their guidance to almost 37% revenue growth, and they are confident of maintaining an EBITDA margin of close to 20%. In an environment where different technology companies are reducing their guidance, this company has increased their guidance both in terms of revenue as well as in terms of margins. In this particular quarter, which is Q2 FY24, they have clocked a deal size of about $156 million, and the management is confident that going forward also there is a good pipeline of deal wins coming in. Along with the organic growth, the company has also been doing acquisitions and efficiently merging those companies into itself, leading to inorganic growth. So they look for complementary technologies and acquire that company, and to that same customer they do cross selling of their existing technologies, leading to faster growth of their acquired company. When you look at the valuations in terms of market cap to sales, in the COVID period the stock used to get 1 or 2 times the multiple. Then on an average it used to get 3-4 times, but now because of its superlative performance the stock is getting as high as 8 to 9 times of the revenue multiple. In terms of earnings, it is trading at somewhere around 78 times, which is quite expensive. Now, what are the risks of investing in this business? There is a customer concentration risk, as there are limited OEMs or the auto manufacturers which contribute to major revenues, whether it is in this company or any other company for that matter. It's in an auto ancillary sector or any auto company. As they deal with limited big brands, there is a customer concentration risk. Technology risk, because this company has to continuously innovate new technologies, otherwise they'll be left behind. There could be a element of cyclicality in the auto sector, but in the last few years it has been doing well, and going forward for the next year or so also the auto sector is expected to do well. In terms of mergers and acquisitions which this company keeps doing, if at all they fail to merge the company in a proper way and utilize the acquired company in a good way, there could be a risk of failure in acquisitions. If there is a global slowdown, it could impact the business of this company. But what this company says is, as they are a technology company, the auto OEMs cannot stop investing in technology even if there is a slowdown. But still overall there could be a little impact on their business. In terms of valuations, although the performance has been very good, it is trading at very high valuations. So if at all the performance slow down, then there could be a huge downside, as it is trading at a very high premium valuation. So now that you have understood the business model, the growth prospects, the risks, the valuations and the stock performance, what is our view on the stock? If you are already a shareholder of the company, as long as the company is delivering quarter on quarter growth, continue to hold the stock even if it is trading at slightly rich valuations. And if at all you are a new investor thinking of entering the stock, the present valuations are quite expensive, and the re-rating possibility from here onwards is none, because the re-rating in the valuation has already happened. So the growth from here will be equivalent to whatever growth the company brings in terms of revenue and profits. But the overall risk reward is not in favor of investors who enter at these kind of levels if you are a value investor. So that's about KPIT Technologies. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to mention those in the comment section. Do remember that this is not a buy or sell recommendation. We are just analyzing for educational and case study purposes. Thank you for watching and have a wonderful day.